Hello there again and welcome to Market Insight for fine Friday, the 9th of August, 2024. I am David Chiedu. Today we're talking about the implications of the recent protest against bad governance in the country and the fallout on the Nigerian economy. However, before then, we will be taking a look at what is happening in the global market with plummeting stocks and investor scare here and there. But of course, before then, we'll first of all take a look at the trading week on the NGX for last week, or for the week as you were. Let's quickly take a look at the happenings on the NGX. At the end of yesterday's trading session on the Nigerian Exchange Limited, a total of 604 million, beg your pardon, 290,802 shares in 9,058 deals, corresponding to a market value of 13,813,765,193.27 were traded. Compared with the previous NGX trading day, which was Wednesday, August 7th, Thursday's data shows that there was a 5% decline in volume, 8% improvement in turnover, but 7% decline in deals. The current market capitalization of the Nigerian Stock Exchange is 55.7 trillion naira. In the aggregate, 117 NGX-listed equities participated in trading, ending with 33 gainers and 20 losers. MTN Nigeria led the gainers with 10% share price appreciation, closing at 198 naira per share, followed by Vitafoam Nigeria going up by 10%, Unilever Nigeria going up by 10%, and Okomo Oil Palm going up by 9.99%. On the losing side, United Capital came out last with an end-of-day price depreciation of 9.94%. at 14 naira 50 kobo per share, followed by Abbey Mortgage Bank going down 8.05%, Sterling Bank going down 5.66%, and Ikeja Hotel going down 5.56%. Access Holdings recorded the highest volume of 116 million traded shares, followed by Guarantee Trust Holding at 110 million. Abbey, that's Abbey Mortgage Bank, 50.7 million, and United Bank for Africa, 44.6 million. Regarding the performance of the NGX market indices, the benchmark NGX All-Share Index increased by 1,017.29 points to close at 98,116.27. representing a one-week gain of 0.78%, a four-week loss of 1.36%, but an overall year-to-date gain of 31.22%. And that's the stock market report. Now, for what would be the first part of this conversation, we're taking a look at the global market review. Now, there have been fears of a U.S. recession, and it has indeed gripped global markets, triggering a share market rout that prompted investors across Asia, Europe, and North America to all unwind their positions at the same time. Now, the plunge has raised questions over whether investors are facing a historic share market crash that is similar to the global financial crisis of 2007, 2008, or way back, the 1987's Black Monday, or if it is simply an overdue pullback after a stellar period of strong returns. Now, it escalated after the U.S. Federal Reserve hinted that interest rates would soon be cut in what was initially seen as a stimulus for shares. But the gains quickly evaporated as investors interpreted or reinterpreted the impending rate cuts as a sign that the world's biggest economy was, in fact, faltering. So now there is a global storm of economic uncertainty. Trade tensions are escalating and markets are plummeting. The question then So what exactly does it all mean for your investments as an investor and the future, as he were? We're being joined this morning by Mr. Marcel Okeke. He is a business and communication strategist, former chief economist, chief sustainability officer, group head of research and economic intelligence group, as well as assistant general manager at Zenith Bank PLC. He's also the chief executive officer at Mascot Consult and Communications Limited. Good morning, Mr. Marcel. Thank you for joining us.
Thank you very much for having me on this program. Thank you.
As we go further, Mr. Okeke, just to give an overview, a very detailed overview, several pieces of economic data, including manufacturing and, of course, crucially, jobs and payroll data, raised questions over the health of the U.S. economy, signaling a recession. Now, if we want to take this, going by SOUQ's rule, we'll see that the indicators are pretty strong because, based on that particular indicator, which is triggered, by the way, by the rise in unemployment rate, it has been that way and has identified successive recession since, the Second World War. And it, led to high volatility in the global currency market, significant currency market fluctuations, as well as, having an impact, severe one, on trade and investment. But there is, some concern, or if you like, more concern about the impact that this would have on emerging markets, which are often more vulnerable to global economic shift. So in your view, Mr. Okeke, just how significant is all of these for them?
Thank you for the analysis and, the situation you have presented. The truth is that a lot of things are happening in various parts of the globe, and because the world is a global village, whatever happens in one location has a way of, impacting on the rest of the world. The situation you mentioned in the US, is not one that is likely to linger because, like you also said, the US economy, is a very big one, and in fact, the largest in the whole world. Don't forget that all this is happening on the backdrop of the fact that the US will soon be going into a serious election. And so there's this relationship between politics and economics. And so I'm not saying anybody will be working against the economy, but, some missteps in terms of policy decisions and actions or occurrences in the US, could be blown out of proportion. But like you also said, some of the things that happen in US usually have, consequences, like I also said, for the rest of the world. But the point is that, the US, being the kind of economy it has, is normally known to be a stable economy, and so has all the shock absorber to even absorb, whatever shock is going through now. And so, from my perspective, and what I've already read about, the issues, especially the happenings in the past 1 week, I don't think there's any cause for alarm as far as the U.S. situation is concerned. And even the rest of the world, where the reverberations, we get to. The economy, whatever next that will happen in the U.S. will really, go to a large extent in stabilizing, and dousing whatever tension that's been generated. That's my position on all that. Thank you.
But you say that, Mr. Marcel. However, there are some top economists, such as yourself, globally, who have, pointed to the indicators that there could be, an exacerbating level on, on some industries, specific industries that are reliant on, raw materials, as he were. What do you make of this?
Yeah, certainly. Every economic condition has a way of affecting some, sectors, either more negatively or more positively. And that is exactly what you have said. So whatever situation arises, some sectors of the economy or some companies are likely to suffer, negative effect, while others are likely to receive the positive side of it. So going forward in the US, and even if, like you said, it becomes, they embark on any stimulus packages, for industries or particular sectors or for the entire citizens. Not everybody will have it, have a positive effect. So we have negative touch, while others will have positive impact. And so that is normal. At the end of the day, we look at the aggregate, what is the overall result? And I am telling you that going forward, the much feared recession, in the US is not likely to, come to be. That's my position.
All right. Now, part of the impact, just as I said, and I'm going to piggyback off of that last point, part of the impact we're seeing in, specific industries or sectors would be tech, the technology space, which is already experiencing a downturn. And according to some experts, it may worsen yet. Fingers crossed to see whether or not that happens. However, the sector has declined by 15% in the past quarter, according to the S&P 500 index. So, Mr. Okeke, kindly give us a sense of, current investor sentiment in this regard, for instance, and also what are their best options, if you like, at this point? How should they respond?
Well, when you say investor sentiment, investor sentiments are usually expressed not as a function of one variable. So many factors are considered. The larger economy, is usually considered, and a lot of indicators, come into play. One is that, like I said, the U.S. economy overall is a stable economy. You understand? And the tech sector you're talking about is one of the drivers of modern day development, especially in developed countries. And so whatever is the situation now, I can interpret it to be a temporary situation because of the advancement or the dependence on tech, for some other, some other sectors of the economy and all kinds of human activities. It is very, very likely that whatever caused the downturn, if I may call it that, will really give way sooner than expected, given the progress of sectors of other sectors of the economy that, really to a large extent depend on the tech sector. You understand? So that's the way it is. Thank you.
All right. Now let's go on a tangent and draw parallels with what we've seen in the past, whether the recent past or the distant past. I mentioned earlier the 2007-2008 global financial crisis. Currently we're seeing high levels of debt, financial market volatility, and a loss of investor confidence, as we have just, talked about. Central banks lowered interest rates. In that case, talking about the 2008 situation, what we saw as the quote and unquote veritable solution was to see central banks lowering interest rates rapidly to, very low levels, often nearly zero. They lent large amounts of money to banks and other institutions with good assets. Now, if we go farther back to the 90s, 1997 to be exact, with the Asian financial crisis, it does share certain similarities with this one as well. We're talking about currency fluctuation, trade tensions, and emerging market vulnerabilities. And what was at the time one of the solutions, amongst many others, was the IMF stepping in to bail out most of the affected, economies. And, they also required governments to raise taxes, to eliminate subsidies, and restructure their financial systems, among many others. So in this particular case that we find ourselves right now, even though you have said that there isn't particularly much cause for alarm, but as I said as well, some experts share converse, views, but be that as it may, in this case, how do you see the central banks responding? I'm talking about the Federal Reserve, European Central Bank, and the Bank of Japan. How do you see them responding to this particular distress that could be crucial in stabilizing the markets? Because some experts in this regard worry about protectionism if care is not taken. What do you make of this?
Well, let me tell you that whatever decision the central bank of any of those, regions you mentioned, takes, has a way of, having reverberating effects on the economy. Let me say this, for instance. If the Monetary Policy Committee, goes ahead to raise their MPR, the monetary policy rate, it has a way of having multiplier effect, because other interest rates, by the financial services industry in those regions, we go up. And so that going up, we now send all kinds of signal to economic agents within the system. So the various central banks usually are aware, of this situation. The reduction, rather in MPR, is likely to have an opposite effect. And given the fact that those economies you mentioned are really usually stable and productive economies, their central bank will not just go haywire, if I must say, in terms of either raising their interest rates, markedly, or dropping it, substantially. So there's a kind of dilemma, in those places. Is the situation are not necessarily what could be handled only by monetary policies, in those various regions you mentioned, because there is the interplay of their physical and monetary issues. Okay, so I don't see any of those regions, whether in the US, whether in the UK or Europe, any substantial rise or raise in their monetary policies. There should be a kind of wait and see, because the picture you are painting, the volatility we are seeing, mere recent developments, and so it's not something the monetary authorities will rush into, taking such impromptu, if you like, or such, rational, if you like, or irrational decision, or not appropriate decision in terms of movement of rates and all that. So it's something that I think they should wait and study the situation, and see how even whatever is happening in the other parts of the world, will affect their own local economies. That's what I have to say for now.
All right. Let me also get your thoughts regarding what it would be like long term vis-a-vis the implications. Let's call this, if you like, a prognostication at this point in time. The global economic growth, according to the IMF, is supposed to be 0.5%. There's supposed to be a decline, as a matter of fact, to be specific, of 0.5% in the year 2024. So in your view, how do you see all of this playing out long term for global markets, trade, and even growth opportunities for some sectors or industries globally, as well as emerging markets?
Let me say that again, because the world is a global village. There are a lot of things are unpredictable. For instance, nobody knew that the situation in Ukraine was going to linger, this long. And here we are, it remains unresolved. And there's always tension in the Middle East and some other, spots, in the world. So how these, hotspots, I call them, are handled, we go a long way in determining a lot of outcomes in terms of the economies of various regions. Be that as it may, no part of the globe is immune, to the negative effect of what I've just said now. And so because of that, investors, across the globe will be monitoring the situation, to see how it blows up or how, it comes down, based on roundtable discussions. Of course, every serious investor, especially global players, have a way of, having their pillars everywhere and monitoring what is going on. So my prognosis, like you said, is that bearing what is happening in these hot places I mentioned, the global economy is likely to still not miss that 0.5% growth projection by the IMF. And so players in various parts of the world, go on with their business as usual. And we don't see any serious, missteps, or miscalculation, or huge loss to be incurred by investors, as long as they're able to, monitor the situation and not, take radical position. Thank you.
Now, in light of the hashtag End Bad Governance protests around the country with calls for much better living conditions, stakeholders have lamented the looting of businesses and livelihoods in some states. Now, the Minister of Industry, Trade and Investment, Doris Uzoka-Anite, says that approximately 52 billion naira worth of goods were looted or destroyed in the states where it happened. But overall, the economy has reportedly suffered a loss of over 400 billion naira in just one day. Some others predicted it was going to be 400. No doubt it's a setback for the economy and entrepreneurs, as it does indeed hamper investment opportunities get towards stimulating the economy. Now, we discussed the implications of this with Mrs. Temitope Akinsemoyin. She is a Akinsemoyin, beg your pardon. She is a public administrator, management executive, and data analyst. Dr. Temitope, thank you for joining us. She's with us in the studio and looking all sorts of glamorous. Thank you for joining us, Doctor. First of all, let's get your thoughts regarding this. This is a really serious issue for us, economically speaking. But I would lay a background, first of all. Research has indicated that the events such as this, what we've seen in the last couple of days, talking about protests or social unrests, as you were, can reduce stock market returns by an average of 16.5 basis points shortly after the event occurs. Now, it also, often leads to increased volatility in stock markets as investors become uncertain about, future stability of the region and the economy at large. Now, what sort of effect, would this social unrest have on market volatility and investor confidence, as it were?
Thank you very much. As we all know, that investors react negatively, to situations such as protest, unrest, and we can see that happening with the Fulani herdsmen invasion, from the northern part of Nigeria that has now, degenerated into the end bad governance protest. And these investors generally would want to just sell off their equities, their investment, because they want to protect their asset, and for that is just for the local investors. And for direct investors, the foreign investors, sorry, they are reading the news, they are seeing what is happening. They would not just want to, put in their money where they cannot, be rest assured of getting a return. So this overall would just affect our foreign direct investments.
Now, it's looking rather bleak as far as, the economic environment in the country is concerned. Do you see us, at this point in time, suffering a loss that might be a little too, cumbersome to come back from, based on, the indicators as it were?
I think on a short term at the moment, we are going to suffer the effect of this NSAS protest. That you can see the looting that has happened all around the nation. Just in a day, when it started, I think it was about 52 million naira, and overall, I think we're on day 7 or 8 of the protest, and overall, it's estimated to be around 500 million naira alone. And there is, just for example, there is a trending video on social media where there's this very big pharmacy, and they went in and they looted, and the man was crying and saying, "Oh, my investments have gone," and the man was saying over 100 million naira is gone, and that has happened, rippled effect, all around. Even the Nigerian Communications Commission, they looted the training center. You can see how that has set us back. They said there was meant to be a training for the youth around, and they can't do that again because there's no equipment to even train them with. So overall, we are going to suffer this. I don't know how long, but in the short term, I think it's going to really affect us.
All right, let me come to you, Mr. Okeke. Are you still there with us? Let's draw parallels between what we're seeing now vis-a-vis these protests and some that have happened in recent history, dating back to somewhere about a decade or thereabout. We'll start with the Arab Spring, 2010, 2012. We saw exactly what happened, and some huge losses were recorded during that period. In Egypt, for instance, it led to a decline in tourism, which is a key sector, and a decrease in foreign investment. In Tunisia, also, we saw a disruption of trade, and also it led to a decline in economic growth. In Libya, on the other hand, it led to a collapse in the oil production, which is a mainstay of the economy, totaling everything that happened in those places I've mentioned. The total of it all saw a GDP decline of about 250 billion. That's billion dollars, that is. Foreign investments decline of about $100 billion. Infrastructure damage to the tune of $500 billion. Now, in much more recent history, we saw what happened with the Black Lives Matter uprising some years ago. That one was estimated to be around, the loss, as it were, was estimated to be around between 1 and 2 billion US dollars. We're talking about the damage to property and looting and loss of business revenue due to closure. Also, back here in Nigeria, just recently, 4 years ago, the hashtag #EndSARS protest, the disruption was estimated to have gulped 1.5 trillion naira. So it went into its trillions, not billions in this case. And that was really huge and monumental for us. Approximately 1.03% of our GDP and 11.47% of the following year's budget. That's 2021 budget. Now, in this case, how exactly would this impact our GDP, in your view, vis-a-vis inflation and employment?
Thank you again for this question. The truth is that what has happened, the bad governance, protest, has local and external side to it. In the local side, all business had to be in their homes, or some that left and the country, and so meaning that businesses were grounded, for those days. And although I don't have the figures, but you are mentioning some, hundreds of billions, that would have been lost. That being lost, and businesses disrupted, including farming and so on and so forth. It's not unlikely that when the figures are out, inflation rate, will still be up. Okay. It's not also unlikely that since production and economic activities, were for those days disrupted, it's going to reflect in terms of GDP figures when they are computed. And then externally, the impression that is being sent to the rest of the world is the instability of our economy, meaning that even people who are standard investors, will be very worried as to whether to bring in any dime into this economy, either by way of portfolio investment or foreign direct investment, and FDI more, because they are likely to come in and set up instead, or the contrary. We'll be seeing many of them that want to leave Nigeria. So these are the likely outcomes of what's been going on. Okay, we don't want to go into the justifications or otherwise, of those protests. But government has, taken some lessons from it, and I believe that going forward, it's going to come up with a lot of policies and measures, to ensure that we don't have a repeat of such a ugly incident. That's what I have to say for now. Thank you.
Right. Now let me come back to you, Dr. Akinsemoyin. Give us a sense of what key sectors or industries you think could be hardest hit based on what's happened over the last couple of days.
Okay, about 5 major sectors will be affected, and we can see that the first sector is agriculture. You could see the rise in the cost of foodstuff, because farmers cannot go into the farm to, produce because there's an unrest, there are protesters on the road, they are blocking the road, no access to the farms, So there's shortage of agricultural produce at the moment, and we can see that, and also the logistics and transportation sector, we can see that there's a restriction, in movement, so this has affected overall prices in our local goods, such as petroleum product. We can see, I think about last week, the petroleum product, the petrol, as we popularly call it, went from about 650 to 8,300 naira. That is very bad. And also look at our manufacturing industry. People cannot go to work. There is no production going on at the moment. The stock that they have, they want to, just sell. They will just, put it over there. And look at retailing. For example, they have gone into these industries, people's industries. They've gone to loot their stores, they've gone to loot their production houses. Who is going to bear the brunt? We all know how the insurance company and the insurance businesses in Nigeria, most people do not, really insure their businesses. So who's going to bear the grunt? The people are going to bear the grunt. So the producer, would just share the cost of this production on the already volatile product, so it would increase, the surge again. And look at tourism, for example. Look at the end SARS protest, the end protests, the herdsmen, together. Look at what is happening in the northern part of the country. They have really great tourism sites, but people can't go. They can't visit, because of the fear of this protest, the fear of all of the insurgency and everything going on. And look at eastern Nigeria again, for example. They have really, really nice riverine areas, beautiful sceneries, but people cannot go. And, this has really, really affected us, It has affected the GPD, it has affected us, Generally, we are not producing anything, we are not giving any value. And, this protest is just going on, and we are losing money every day. Everyone is feeling it.
Let's come back to you, Mr. Okeke. Are you there? Can you hear us?
Yes, I'm with you.
As we wrap up, let's get your thoughts on some remedial actions that could be taken vis-a-vis government policies or government interventions, as the case may be. A couple of days ago, that's over the weekend, Mr. President addressed the country to this effect, and he mentioned a myriad of interventions that his government in the last year plus has taken, even up until recently. I can't mention all of them, but I would just point out a few. He talked about securing $620 million under the Digital and Creative Enterprises for Young People, and also talked about the 570 billion naira that's been released to 36 states to expand livelihood support for citizens, as well as the 1 million macro and small business single-digit interest loans that is supposed to start this month, as well as payments of 1 billion naira each to large manufacturers under single-digit loans to boost manufacturing output and also stimulate growth. Now, with all of these, there's still some, if you like, dissenting voices saying that these are more or less, just lofty ideas or lofty interventions that may or may not trickle down to the, to the masses, as he were, the consumer on the streets, as he were. What are your thoughts by way of by way of interventions and remedial actions for all of what we're seeing now, the losses that have been incurred?
Thank you very much. You will agree with me that two major policies of the government, that's fuel subsidy removal and exchange rates unification, were the things that triggered off, the situation that had deteriorated to bring us to where we are today. So if government want to reverse the situation or improve on the situation, the first thing it has to do is to tackle the issue of PMS, which is fuel. And that is why I should suggest that government has to be serious with the decision to sell crude oil to Dangote refineries in naira, let that policy be seriously and committedly pursued to the letter so that we have functioning refineries here in Nigeria. And not only just having functioning refineries, have even a modern refinery. Let all of them massively produce, PMS here, so that this equation of importation of refined product, will be crashed. You understand? So because as long as we keep importing, it gives serious pressure on the foreign exchange market, and that's what's been suffering. So rather than government facing serious in the issue of refining, government has been issuing licenses to cronies and sycophants, who have been importing this in, and that's what is distorting the. As long as you're importing, the pump price of fuel is not likely to come down, and as long as it doesn't come down, it now goes into the cost of transportation, into the cost of food, and into the cost of everything. So that has to be done. Let them remove all kinds of politics around Dangote refinery and allow it, to function effectively. That is one. Two is that there should be deliberate harmony between monetary and fiscal policies. We were just discussing the global situation and talking about how some, central banks are going to cut interest rates and all that. But here we are, our own central bank is raising the interest rate into high heavens. You have a rate of 26.75% as a monetary policy rate, meaning that effective interest rate in the banks are likely to be between 30 and 40%. Which serious business can borrow money at that rate? You understand? And on the other hand, the government is there raising its capacity to borrow from the central bank from 5% to 10%, meaning that the CBN will just print money and they flood the economy with money that is not backed up with any production or productivity. And so the further driving up inflation rate, which the CBN purports to be fighting with the raising of interest rate and so on and so forth. So you see that the other activity on one side acts as a counterpoise on the other one, and the economy gets the worst for it, and the people end up bearing the brunt endlessly. These are my thoughts. Thank you.
All right, I didn't quite catch the latter part of your remarks, Mr. Okeke, but of course, well said. Now, let me come back to you. But before we do come back to you, Doctor, Mr. Okeke made a statement earlier about the government issuing contracts and whatnot to cronies. I would like to say that claim hereupon is unfounded, as it were, because there aren't any indicators or proof to that effect. So just to put that out there and be clear on that. Dr. Akinsemoyin, let me quickly get your thoughts as we wrap up. Long-term economic implications and potential solutions. We've talked about the implications. Let's talk solutions now. Mr. Okeke has given his own thoughts. He talked about the FX, getting our FX house or FX matters in order, essentially getting our ducks in a row as far as FX is concerned. And then he talked about our refineries, making them work. Of course, we have one that is being championed by, Alhaji Dangote at this point in time. So he opines that, it should be crude oil should be sold to him in our local currency as opposed to the US dollar. In your view, what do you think the powers that be, across the board that is, should do to be able to, mitigate the level of loss recorded as far as this particular, events recently have been?
Thank you very much. I'd like to, state something that we need strategic management currently in the country. Strategic management at the moment is very essential. The president has very great policies, but these policies are not for short term, but very great on the long term. But at the same time, the presidency or the president needs to put a cushioning effect, because people have been used to, the situation of the country, and in this place you're trying to fight corruption that has existed even before independence. So we need to systematically put things to cushion these policies that the presidency has put in place. And again, I like to say that our Ministry of Education, of Information, they are not doing enough. The media AVs, they are not doing enough. There is no constructive communication with the people. You're just saying things, in how do I put it now? You're saying things in professional terms.
So are you indicting us, Doctor?
No, I'm saying that the government is putting things in professional terms. People do not want to hear that. They want to hear it in the layman's language. Okay, this is what we are doing at the
Right,
moment.
right.
This is what don't say, okay, people are hungry, you're giving them rice. People need fuel, they want the prices of fuel to come down, you're giving them rice. There needs to be constructive communication. We need to know what is happening day to day. Okay, this sector, this is what we are doing. There need to be reports. People are hungry, they expected more. So first of all, I would say we need constructive communication. Again, we need social programs and capacity development. We are still running on analog. The world has gone digital and even AI at the moment, but most of our industries, most of our ministries, we are still working on analog, and it's driving people crazy because the world is a global village right now. We can see what is happening, in terms of production all around the world, and we need to get there. So I would say we need social reforms, we need cushioning effect for the great policies that the presidency has put out there, and we need to strengthen our law enforcement again, because of people just come in and say, we put you in charge of these monies, and at the end of the day, we can't find what is done with our money, and there's no serious, effect, to punish whoever, has taken this money or something. So these are what I would just say at the moment.
All right. Thank you very much, Dr. Akinsemoyin. That's pretty much it on today's edition of Market Insight. But just a quick look at what has been said so far, putting them in just a few words. Mr. Okeke and Dr. Akinsemoyin put together have both said that some of the things that can be done to prevent these sorts of social unrest from happening, because it's cause and effect. One thing happens, it leads to another, and then of course we feel the ripple effect. So we're talking about getting our ducks in a row as far as FX is concerned, solving our refinery issues, social reforms, as Doctor said, accountability and transparency, as well as communication, proper enlightenment, if you like, as he were, amongst other things. So we're hoping that, slowly but surely we'll see that these things come into play so that Nigerians will have better living standards, and we don't see uprisings like these that would lead to a devolution of law and order and even loss to the tune which we have recorded recently. That's Market Insight, and special thanks to Mr. Marcel Okeke, a business and communication strategist and CEO at Mascot Consulting and Communications Limited. Many thanks, Mr. Okeke, for joining us this morning. We appreciate your time. Dr. Temitope Akinsemoyin, thank you as well for joining us. She is a public administrator, as well as she is a public administrator as well as a data analyst, a management executive as well as a data analyst. Many thanks, Doctor, for joining us on the program today. A quick look at our currency markets before we go on the program this morning. The US dollar is trading to the naira, or started to trade to the naira this week, Monday at 1,512 naira. On Tuesday, it traded to the naira 1,512 naira. On Wednesday, 1,527 naira. Thursday, 1,511 naira. On Friday, 1,515 naira, and that's all at the official market. Many thanks for joining us on the program this morning. It has indeed been quite the insightful time with the gentleman and lady joining us on the program today. I am David Chiedu. Do stay close to SOUQ News Television. Have a wonderful weekend.